And a very good afternoon, investors. You're now on KleverStock with me, Wanizul, and I will be serving you the midday roundup with the latest market updates from this morning up until now. So we kick it off with our local market updates. Bursa Malaysia entered Thursday's session with a cautious tone as a deepening rout in US technology equities sent ripples through global markets. While the benchmark FBM-KLCI managed a slight rebound, rising 3 points to 1,745.83 at the opening bell. Now, investors remained on edge following a sharp rotation out of high-growth tech names in New York. Now, the primary catalyst for the global unease was a productivity paradox sell-off sparked by AI-related disruption fears. Investors are increasingly anxious that rapid AI advancements might cannibalize established software business models rather than just enhancing them. Now, this sentiment was compounded by disappointing sales forecasts from global chip makers, leading to a broader retreat from the technology sector. Now, global sentiment is also being strained by a lack of clarity regarding the US labor market. A partial US government shutdown has officially delayed the highly anticipated January non-farm payrolls report. Now, in its absence, a lackluster ADP private payrolls report, which showed a meager addition of just 22,000 jobs, that has reinforced fears of a low-hire, low-fire economy, pushing market bets for the next Federal Reserve rate cut into the second quarter of 2026. Now, Apex Securities noted that global equities remain on shaky footing as persistent AI-related disruption fears continue to pressure technology stocks. Now, the research firm added that while Malaysia has limited direct exposure to global tech giants, the FBM-KLCI is susceptible to intermittent profit-taking as global risk aversion drives rotation into value-oriented sectors. Now, despite the cautious start, several local heavyweights showed earlier resistance. Maybank rose 2 cents to 11 ringgit 96 cents, while Petronas Dagangan gained 8 cents to 20 ringgit and 4 cents. However, some laggards at the opening included YTL Power. They shed by about 8 cents to 3 ringgit 12 cents, and also Gamuda, they dropped by 6 cents to 4 ringgit 9 cents. In the actively trading list, AI-themed Zetrix AI remained unchanged at 80 cents, reflecting a wait-and-see approach among retail traders. Analysts expect the FBM-KLCI to fluctuate within the 1730 and 1760 range in the near term. While the healthy consolidation helps build a firmer base for the local index, the immediate trajectory will likely be dictated by the duration of the US government shutdown and any subsequent clarity on the global interest rate path. Moving on to our local currency and foreign exchange. The Malaysian ringgit demonstrated notable resilience in yesterday's trading session, closing largely unchanged against the US dollar as encouraging business data from across Asia provided a necessary buffer against global uncertainties. Now, despite a slightly cautious tone in the markets fueled by escalating geopolitical risks, the local currency managed to hold its ground, reflecting a steady confidence in the region's economic fundamentals. Now, by the 6 p.m. close last night, the ringgit was valued at 3.9305 or 3.9345 against the US dollar, a marginal adjustment from Tuesday's finishing rate of 3.9295 or 3.9360. Now, this stability comes at a time when investors are navigating a complex landscape defined by shifting trade policies and international tensions. Offering an expert perspective on the day's performance, Bank Muamalat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid pointed to Positive Purchasing Managers Index or PMI results as a key factor in stabilizing the note. Dr. Afzanizam stated that Purchasing Managers Index data showed that Asian economies, including Malaysia, have exhibited a positive trend, noting that the data signals improving business sentiment despite uncertainties over US tariff policies and heightened geopolitical risks. Now for some local economic news. Malaysia's technology sector is undergoing a profound structural transformation, moving away from traditional back-end contract manufacturing toward high-value front-end segments like integrated circuits, IC design, and also advanced packaging. Now, according to latest reports from BIMB Research, the country is aggressively diversifying its semiconductor ecosystem to become a global leader in AI-focused hardware. Under the National Semiconductor Strategy (NSS), the government is driving a Made by Malaysia initiative. Now, this shift is being championed by two primary hubs, Selangor and Penang. Now, Selangor is rapidly positioning itself as a challenger to Penang's legacy with the development of the Malaysia Semiconductor IC Design Park in Puchong. Spanning 75,000 square feet, it is now the largest IC design hub in Southeast Asia and is already home to over 200 engineers from 14 international firms. Now, the growth is supported by a multi-stakeholder approach involving federal and state governments. A second IC design park in Cyberjaya, featuring the region's only advanced chip testing center, became operational in late 2025. Selangor has also partnered with UK-based Arm Holdings to train 10,000 engineers over the next decade. Meanwhile, Penang's Chip Design Academy, PCDA, aims to train 1,000 specialized engineers by 2030, supported by 110 million ringgit in combined federal and state funding. Now, under the National Semiconductor Strategy, the country aims to transition from Made in Malaysia to Made by Malaysia, with the ultimate goal of becoming a global leader in IC design. That was said by BIMB Research. The research house also maintains a neutral outlook on the broader sector, but remains highly bullish on fabless semiconductor firms. A key focal point for investors is the upcoming Sky Chip Berhad initial public offering, or IPO, that is expected in April. Now, Skychip, a Malaysian designer of high-end silicon for AI and data centers, is positioned to capitalize on the soaring global demand for AI-centric hardware. Meanwhile, Maybank Investment Bank observed improving industry conditions during recent site visits to Penang. While the US dollar volatility and rising labor costs remain near-term risks, the research house identified growth concentrated in AI and data center applications. Now, Frontend Corporation Berhad remains a top pick for Malaysia or Maybank IB with a target price of 5 ringgit 19 cents. And that's due to its unique exposure to front-end semiconductor equipment cleaning and global AI growth. Now, the research house said that selective positioning is in fabless semiconductor companies and targeted infrastructure plays supported by government initiatives offers the best risk-reward balance in the current environment. Investors are encouraged to prioritize firms with clear exposure to AI and high-value IC design, as these are likely to capture the strongest growth in the coming years. Continuing with more economic news updates, Nomura Asset Management, Sdn Berhad, also known as NAM Malaysia, maintains a bullish outlook on the Malaysian equity market, identifying the strengthening ringgit as a primary driver of investor confidence. Now, according to Atsushi Ichi, director of NAM Malaysia, the currency's robust performance serves as a vital economic indicator, signaling a resilient recovery and a healthy climate for domestic investment. Speaking at the launch of their firm's global multi-theme equity fund yesterday, Ichi emphasized that the majority of their assets are denominated in ringgit and supported by local investors. He noted that the currency's appreciation provides significant advantages for the financial sector, stating a stronger ringgit translates to a positive tailwind as it reflects confidence in Malaysia's economy. He further explained that this trend contributes to improved asset values and potentially lower funding costs, which specifically benefit ringgit-based investment funds. Now, the newly launched Global Multi-Theme Equity Fund is designed to offer Malaysian investors diversified exposure to high-growth sectors and long-term structural trends worldwide. Now, despite the backdrop of global market volatility, Ichi affirmed that the firm's outlook remains firm, noting that performance continues to be supported by expectations of continued economic growth. We'll take a quick break, but don't go away. We will return shortly with corporate news developments. And welcome back to the Midday Roundup. Let's continue with some corporate news updates. So, mechanical and electrical M&E engineering specialist Ki Ming Group Berhad has received an overwhelming response to their IPO, with the public portion oversubscribed by a staggering 54.16 times. Now, the company, which is en route to a listing on the ACE market of Bursa Malaysia on February 12th, received 9,573 applications for nearly 896.38 million shares, and that's valued at approximately 340.6 million ringgit, based on its IPO price of 38 cents. Now, the high demand reflects strong investor confidence in Keeming's position as a beneficiary of Malaysia's infrastructure boom and the rising demand for high-end data centers. Now, within the Bumiputra portion, the company saw an oversubscription rate of 27.10 times, while the remaining public portion recorded a massive 81.22 times oversubscription, highlighting broad-based interest across the Malaysian investment community. Now, the IPO exercise, which aims to raise a total of 31.5 million ringgit, consists of a public issue of 66.63 million new shares and an offer for sale of 16.25 million existing shares. Managing Director Liu Ka-ho noted that the positive response reflects investor confidence in Keeming's technical expertise, execution track record, and long-term growth strategy, as the group looks to solidify its engineering capacity. Proceeds from the listing have been strategically earmarked to scale the group's operational footprint. Approximately 13 million ringgit is allocated for project working capital, while 4 million ringgit will be used for performance bonds to support the bidding of higher value contracts. Now, the group is also setting aside funds for the expansion of its project team and the implementation of a new enterprise resource planning ERP system to streamline internal efficiencies. As of late 2025, Keeming held an outstanding order book of 176.1 million ringgit, providing strong earnings visibility through 2027. Now, the company is particularly focused on three growth catalysts: clean energy interconnection works, data center cooling and power systems, and industrial design and build projects for the semiconductor sector. Upon their debut, Keeming's enlarged share capital will comprise 325 million shares, resulting in an initial market capitalization of 123.5 million ringgit. TA Securities Holdings Berhad is serving as the principal advisor, sponsor, and sole underwriter for the IPO. Up next, we have some business updates. Petronas LNG, a subsidiary of Malaysia's national energy giant Petroleum Nasional Berhad, also known as Petronas, has signed a landmark 20-year liquefied natural gas LNG sale and purchase agreement with Qatar Energy. Now, this historic pact represents the first long-term LNG supply arrangement ever established between the two industry leaders. Under the terms of the agreement, Petronas LNG will offtake up to 2 million tons per annum MTPA of LNG from Qatar Energy. Deliveries are scheduled to commence in 2028, with the supply originating from Qatar's massive North Field expansion projects. The deal was formalized on the sidelines of the 21st International Conference and Exhibition of Liquefied Natural Gas, also known as LNG 2026, that is happening in Doha, Qatar. Now, the long-term volumes secured through this SPA are expected to play a decisive role in reinforcing Malaysia's domestic energy security, as the nation faces rising energy demand, driven significantly by the rapid expansion of the digital economy and data center developments. Securing stable and reliable LNG availability has become a national priority. Petronas President and Group CEO Tan Sri Tengku Muhammad Taufik stated that this agreement marks an important milestone for Petronas in bolstering energy security for those we serve. He also noted that the partnership with Qatar Energy would diversify Malaysia's supply nodes, complementing existing cargoes from Petronas' core production facilities in Malaysia and Canada. Now, the collaboration is also a strategic move to enhance Petronas' portfolio resilience within an evolving global energy landscape. By locking in long-term supply from one of the world's most reliable producers, Petronas aims to ensure it can support Malaysia's economic development while simultaneously navigating energy transition priorities. His Excellency Saad bin Sharida Al-Qabi, Qatar's Minister of State for Energy Affairs and CEO of Qatar Energy, expressed satisfaction with the agreement, noting that it highlights Qatar's continued commitment to support the growing energy needs of Malaysia as well as our customers across the globe. Now, the deal follows a similar long-term arrangement recently signed by Qatar Energy with Japan's JERA, further cementing Qatar's position as a linchpin of global energy stability. And finally, we're going to be wrapping it up with some major corporate developments and deals across Malaysia. Here are the top headlines. At number 1, IOI Properties Group Berhad said it has signed an agreement to sell 136 acres of land at its industrial park in Banting, Selangor to that of Bridge Data Centres Malaysia, Sdn Berhad, for approximately 740.7 million ringgit. And number 2, Benastra Corporation Berhad has secured 503 million ringgit contract from Exim Seri Permai Sdn Berhad for a proposed data center development at Jalan Seri Permaisuri, Kuala Lumpur. Our next headline, according to Deputy Prime Minister Datuk Seri Fadilah Yusof, Permodalan Nasional Berhad will assess Sunway Berhad's voluntary general offer for IJM Corporation Berhad based on commercial considerations, and the decision to accept or reject the offer will be made independently. Our next headline at number 4, Celcom Digi Berhad has partnered with Google Firebase and Telenor Links to enhance secure application programming interface as a service capabilities using telco-grade network intelligence. Interesting stuff from Celcom. And number 5, the headline is Nestle Malaysia Berhad. They've partnered with UPM, University Putra Malaysia, to introduce a Halal at STEM learning program for secondary school students. Well done. Our next headline at number 6, Southern Cable Group Berhad, they've secured additional orders worth approximately 121.1 million ringgit from Tenaga Nasional Berhad to supply underground power cables and conductors. And that, ladies and gentlemen, is a wrap for the Midday Roundup with me, Wanizul, right here on KleverStock. Thank you so much for choosing us, investors. Hope you are having a wonderful week, and don't go away. We've got some upcoming live stream programs for you later on towards the day. Have a wonderful time.